I'm up about 107% when it comes to my Google position. This comes from not chasing what I think is the next best thing, but by focusing on quality investments and letting time do its work, compounding, allowing my positions to build and grow. As of the time that I'm recording, Google is up about 5% on the day, and so is Caterpillar, another company that we're going to be taking a look at. I don't hold this as an individual stock in my portfolio, but it's in the top 10 of SPMO, an ETF that I've been building into. Caterpillar is moving up on some fresh news, but we're just going to be going through focusing on the fundamentals and not interrupting the compound growth. Back to Google. It was down double digits until this push up today. Year to date, down about 8%. A slight improvement, but what I want us to focus on is that quality companies recover, grow, and compound. They're focused on innovation. They're generating cash. They can survive the volatility. And I will be rewarded for my patience as well as building up positions into quality companies while we're on the dip. And remember, you don't need thousands of dollars. I got started with this one when it was $3,000, but I was consistent by investing with fractional shares, $5, $10, $20 at a time. And I do the same with all of my investments. Proven investments that I'm comfortable holding through the volatility. Overall, it's a green day on the market. The S&P is up 2.4% right now. There are some hints that tensions may be easing when it comes to the conflict in the Middle East, and that gives a little boost to investors' confidence, allowing a little push back into the high growth tech stocks. When it comes to Google, they've recently introduced a new internal AI efficiency tech called TurboQuant, which, according to these articles, dramatically reduces memory and energy usage. And this is important because when AI becomes cheaper to run, Google's profit margins can expand. Efficiency aiding in the growth for this company. So this is some good news for Google. Just after last week, the headlines all focused on the jury ruling around Meta as well as YouTube, which is a part of Google, deliberately structuring their platforms to make it addictive. So these headlines cause these different companies to be impacted, but we see that it doesn't take long for investors to move forward and look ahead to what's next for these companies. Now let's take a quick look at Caterpillar, and this company is in the top 10 of SPMO, which is Invesco's S&P 500 Momentum ETF, up 5% on the day and 22% year to date. So Caterpillar is known for being a construction, mining, and equipment manufacturer. This company, as well as many others, will benefit when energy prices stabilize, and industrial companies benefit from their operating costs being more predictable and stable. And when those global tensions ease, investors will rotate into tech as well as these strong industrial companies. So back to SPMO, the Momentum ETF that holds both Google and Caterpillar in the top 10. It's up 3% on the day, a fund that keeps me diversified and gives me exposure to those quality companies, focusing on a structure that gives exposure to profitable companies, shifting and changing those companies for me based on the momentum. This is overall my strategy: buying quality stocks and funds, holding for the long term, building during the volatile times, and letting time do its work by compounding when it comes to my positions. So in the comments, share a few of those individual stocks, ETFs, mutual funds that you've incorporated in your portfolio because of their ability to give you exposure to a high quality investment. When it comes to Caterpillar, they've had some recent price target increases. For example, Barclays raising it from $625 to $700. This is tied to its overall business strength. Just another point that shows me why I'm focused on incorporating funds that are going to look for companies like this to give me exposure to. And when it comes to Google, which currently has a stock price of about $287, they have price targets of $379, which would be about a 35% upside. Even if I'm not deep into profit, I'm focusing on the fundamentals and holding on for the recovery, even though I am down across the board. I see what putting the work in and holding can lead to. So when it comes to Google, I currently have 26 shares with an average price of $138.89, showing me that patience pays, and so did putting the work into dollar cost averaging years ago when it was $140, $50, $60. So today, as far as an investment, Google is one of my biggest movers in my growth portfolio, up $357. I also did a trade this morning and made $200. This is the power of focusing on quality. Core positions, quietly compounding, waking back up, and taking trades in line with whatever the market is giving us on the day. Calls on the way up, puts on the way down. So I'm staying focused because the market will stabilize. The momentum will pick back up and my portfolio will be on track. So I'm going to stay focused on holding and building, not selling because of any market volatility. I put the work in already to know I have quality investments in my portfolio. Make sure to like, subscribe, hit that notification bell, hype this video, and check out my referral links. They'll be in the description and pinned in the comments. Thanks for watching. Okay, bye.